Hello, welcome to another talk on money, business, and investment. My name is Jose. I'm the founder and chairman of the company here at Master Investor. Ensure to subscribe and turn on the notifications so that we know when we go live or upload a valuable talk that can literally change our finances forever. As long as we apply what we're learning from our mentors and to our daily life, then we will get the results that our mentors are getting. It's all about finding the real teachers when it comes to money and investing. There are too many people out there talking about investing. However, they do not have the basics and they don't continue to hone down on those essential principles when it comes to understanding how to invest like the ultra wealthy, which requires us to have a commitment in financial education. Check out our website, go to our digital courses, start investing in high quality financial education to have access to the knowledge that creates true wealth. Today, money is created with debt, as we understand here at Master Investor. We talk about it all the time, why money today is created with debt. And that happened back in 1971, August 15, when President Nixon separated the gold standard from the US dollar. From that point forward, money became a currency, monopoly money, fiat money, paper money, and just an idea backed up by confidence. From that point forward, money became debt in a full currency. Today, the most important words in the business language are cash flow. And the reason why is because money must continue to move from asset to asset in order for that money to create more passive income, or also known as cash flow. And that's what we want. What is our cash flow? Ultimately, as an inside investor, we want to know how much passive income will we get from our investment. How much is the bottom line after everything is paid, after all expenses and all the staff and the team is paid? How much am I keeping every single day? And that is what we're looking for. Even before investing into anything, even before we start the investment, we know exactly how much we're going to get because we have a plan that is a winning plan. That's how we define investing here inside of Master Investor. We define it as having a plan with a lucrative exit strategy that is catered to create passive income, because an asset puts money into our pocket whenever we're not working, because it's composed of a system of systems doing the selling and telling for us. With smart marketing and the right systems in place, we need to understand how to adopt the ultra wealthy context, because that is the key of becoming wealthy. The first step is to change the way we think about money, and we can begin to have more confidence when it comes to raising capital, because the job number one of a wealthy entrepreneur is to raise capital, and the job number one of an inside investor is to multiply money through sound investing and maintain that money working, right? So we look for assets to acquire, to build. We can build an asset from scratch. We can start a business from scratch because we have the knowledge of how a business runs and how to create one and how to protect it and how to make it valuable, not just a business, but a brand. And that requires us to give our businesses intrinsic value, which means that we're protecting whatever we do that is unique. We're protecting it with the legalities, with the patent, trademark, whatever needs to be registered, whatever we are creating for the marketplace, that needs to be protected so no one else can take that away from us. And then we need to have business integrity in our businesses. That means that the businesses are built to raise capital from the front end to be lucrative, and also from the back end, because we have established the right components on the business, the 8 integrities of a successful business: mission, team, leadership, cash flow, communication, systems, legal, and product. Once we have those 8 integrities well established in our businesses, then our businesses will create passive income even when we're not present in the business. And that's the whole purpose of building a true business, is so that it grows successfully even without us being present, because we want freedom. Ultimately, the holy grail of investing is to have return on investment that is infinite, specifically called infinite return on investment, or also known as IROI. That means that we have recouped our initial capital that we invested back from the business or investment, and we continue to control that business. And of course, we continue to collect the passive income from the business. Now it's even higher because we don't have to pay us back anymore. We recoup the initial capital back. Therefore, now is only free money coming to us from thin air. And that is what we are looking for to obtain on every single business that we ever embark on, is to be able to recoup our money back and continue to control that business so that we can have more freedom, to expand our freedom. When we build wealth, I want us to keep in mind that we need to approach everything with not only a positive mindset, but we need to think big. We need to use our imagination to grow our wealth beyond our dreams. And that requires us to become very generous, to think about others' mistakes and others' problems that they're having today, so that we can solve those mistakes, those problems that are in need to be solved with a solution. That's when we can get rewarded, when we serve other people. So becoming a successful business owner and inside investor requires us to implement the ultra wealthy context, which is more important than the content. A person that doesn't have the wealthy context but is exposed to the right content, that person will not be able to achieve total freedom and have true wealth, because it's missing the wealthy context. It's not just how much money we make, but how much money we keep, and how much money we keep multiplying through sound investing. That's the holy grail of investing, is that we continue to multiply money from asset to asset, keep it moving, whether it's a loan that we're getting, because remember, debt is money. Today, money is created with debt. And generally speaking, debt is tax-free. That way, we can use debt to minimize taxes legally, because as we know, taxes are the highest expense humans have in their lifetime. At least the people that don't understand the new rules of money and how money is truly made today, which is through debt. That means that the government uses debt to move the economy forward. Today, the monetary system works with debt. And a lot of people have a hard time shifting to that mindset, into that new way of thinking about money, because people tend to want to express money as being something real, something that is tangible. And the money that we have physically today, that is fake money, is fiat money, is paper money. There's nothing back in it. Before 1971, it used to be that gold backed the dollar. That's why gold is part of the commodities asset class today, because it's not longer with fiat money. It's not longer the same. So that means that when money loses value, when the dollar loses value every day, the gold standard usually goes up, because now it's the very opposite. It's not longer attached to the gold. So it's not dependent on what the gold is doing. And we need to understand how to invest in all the 5 asset classes that exist, not just one asset class. We're going to talk about investing in different asset classes and how to do it successfully, not just putting our eggs in one basket. Today, our topic is going to be on what are Bitcoin bonds versus traditional bonds. A brief overview of how Bitcoin bonds compare to traditional bonds. Go to our website get our digital courses and ebooks. We have 3 right now available in our store. The 10-year rules of money, how to build cash flow with the internet, turn passive income on, and how to invest in crypto to build wealth. Once we locked in any of the digital courses that we have available online right now on our store, whatever asset we add into that digital course, anyone that gets in at any time will be able to have access to any asset that we add in there in the future. Even though the price will go up, whoever gets in at that very specific moment, whatever time that may be, whatever assets are in that digital course will be for the member for the rest of their lifetime. And of course, whatever asset we add in there to emphasize more on each topic of each digital course that we have, whoever is a member will be able to have access to that digital course forever, regardless of the price going up. So it's a valuable investment to get in right now because our courses are growing. The more we add into those courses, the prices will go up in value, and we will have valuable content like with celebrities and wealth entrepreneurs that will help us emphasize on each topic so that we can help our community grow with actionable steps that are working today, people that are actually doing what our members want to do. And those people, those teachers, those mentors are having success. So whatever we add into each digital course is to help us become more successful when it comes to building our businesses and our wealth. We can access all the digital courses via our smartphone, so the person doesn't need to have a laptop. And they're available right now in store. Click the link somewhere in the description and go ahead and get inside of our digital courses and start creating a business plan to acquire an asset that's producing cash flow, real passive income that comes in even while we're sleeping. Let's dive into the article today. If you have any questions, let me know in the comment section. I'm going to be coming back and answer those for our community. Summary: Bitcoin bonds combine fixed returns with the potential for Bitcoin's growth. By tying a portion of our investment to BTC, investors may decrease our reliance on fiat money. These bonds are experimental, providing potential upside but also increased risk. While traditional bonds provide stability, they do not protect against inflation. Now, how do we protect against inflation? We diversify among the 5 different asset classes that exist. And that's how we literally stay ahead of inflation, because when a market crashes in an asset class, we have other asset classes that are doing well. Some assets will do great in any type of economy. And we're going to focus on moving money from asset to asset in different asset classes. There are 5 different asset classes that exist today. 1, real estate. Number 2, business. Number 3, crypto. Number 4, paper assets. Number 5, commodities. And here at Master Investor, we're going to be covering all those 5 asset classes because they are all important so that we can become extraordinary when it comes to investing in those asset classes, because that's what we need to be, above average. We don't need to be average investors. We need to be an inside investor, someone that is dedicated to learn about money every single day, and someone that invests with the plan that has a lucrative exit strategy. Is a winning business plan. That's what investing is. So we're going to cover why it's sometimes more convenient and profitable to take bigger risk when it comes to investing, because of not only the learning curve that we're going to be adopting from that experience, and we're going to increase our skills, our ability to make better decisions, to know more about different technologies and artificial intelligence that will help us create more wealth ultimately. So it's good that we get our feet wet into the new technologies that are rising. And as we know here, we always say that traditional bonds are fake assets. If they're not putting money into our pocket, unless the person has so much cash flow coming in that that person may want to choose to put some of that money into some of the traditional bonds. However, as we know, traditional bonds are fake assets because they don't put any passive income into our pocket. An asset, a true asset, puts money into our pocket whenever we're not working. That's a simple definition of an asset. It's a system of systems doing the selling and telling for us, using smart marketing and systems so that we can detach from that transaction, from that business, and we can build something else. It's all about the freedom. Now, if we're solving a problem, we're building a company and the team to solve that problem, and it's going to give us freedom. That's the reward that we have because we have excess of cash flow. The 3 E's of an inside investor: number 1, financial education; number 2, financial experience; number 3, excess of cash flow. So ultimately, if we're acquiring daily financial education, we are investing, we're getting financial experience, we're taking risk that is calculated because all investments comes with risk. Business is risky. Being alive is risky, right? So we need to understand how to manage risk and how to manage debt and how to invest using debt, how to use the tax code for our advantage because it was created by those who had the money, the ultra wealthy, to protect the ultra wealthy mindset, and the ones who play with the rules of the ultra wealthy, which are available to everybody. Even though financial education was taken out of the school systems, and this started back in 1902, 1903, when John D. Rockefeller took over the school board system and instilled a mission to create 2 types of individuals that come out from the school system. Those 2 types of people: employees, people that come out thinking like an employee, looking for a job, looking for security, benefits, and a pension plan. And the other type of individual is soldiers, right? And those people are the ones that defend the companies or corporations of the ultra wealthy, which are governments. And the school system was created to create employees and soldiers. Now, there's nothing wrong with getting professional education and academic education. However, the most important education of all is financial education because this world revolves around money. Once a person graduates from school, they're always looking for a job to make money. And that person that works all day for money, ironically, has no time to make real money. And the real money is passive income. It's a type of money that comes in whenever we're not working. Passive income is a type of income that we focus on building here at Master Investor because that is the income that gives us total freedom. And it requires higher level of financial education than any other type of income. There are 3 types of income that exist. We have earned income or ordinary income, which is taxed at the highest bracket. And that comes from a job. And then we have capital gains income, when we buy something at a certain price and then we sell it for a higher price. Those gains are capital gains income. They're taxed at a higher bracket, at a higher bracket than passive income, but at a lower bracket than ordinary income. So in some instances, we will create capital gains income because some assets in certain asset classes will only give us capital gains income. However, we know exactly what type of income, whether it's going to be capital gains income or passive income, that we're going to get from a certain investment. We will know that beforehand. A lot of people don't even know the types of income that exist. That's why we cover them inside of our education here at Master Investor. At the end of today's talk, we will cover our bonus question: what are benefits of the economic booms? The basics of investing should be learned right now. This is the perfect time because of technology and artificial intelligence. We can literally position ourselves in the marketplace to become ultra wealthy and fast. We don't need to take a long time to become wealthy and maintain that wealth and continue to grow that wealth. It is easier than before due to the technology that we have today to be able to sell worldwide with one click using artificial intelligence, using other people's products. We don't even need to create the products today. We can partner up with other people to sell the products, and all we need to do is create sales funnels or acquire sales funnels because they're already created for us, and we can send traffic to the right sales funnels with the right product and the right offer, matching that preferred client, the one that is ready to buy that solution, and we will make magic happen because we have passive income coming in from different sources. And a lot of times those products are subscription-based products. As long as the customer continues to pay, we will continue to receive passive income. So we want to start thinking how to obtain assets that create passive income, not just capital gains income. We want assets that gives us passive income every single day. That could be in the form of a product that we're getting from overseas, and we're going to create a website, and we're going to drive traffic to that product. And now that is run on autopilot, and it's just one simple product. We don't even control the product. Somebody else creates the product overseas, and once we get a client, it automatically sends that notification and that order to the factory, and the factory will take care of the order and ship it to the customer with our branding on the product. The customer will never know that it's coming straight from the factory. And that, some people call it drop shipping. However, today we can position ourselves, that's a message, on the marketplace with a business that creates passive income, and we don't need to even create the products. We don't need to buy the products. We can use other people's websites, other people's videos, and all the tools are in front of us. All we have to do is use those tools. So we need to become active at investing, not passive. We need to invest for passive income actively, not passively like majority of people tend to do. They tend to give their money away to somebody else to invest it for them. And they're like, okay, I'm on wait for the check to come in. But they have not learned anything about business or investing, because a monkey can do the same thing. A monkey can be trained to give money to somebody else. And remember, does it take money to make money? No, it doesn't. What it takes is financial education. What it takes is having the right business plan in place, because a business can raise capital from the front end, from the clients, even before the business is started. Majority of successful businesses are started with no money, because the business is so good and is well established that it raises capital from the clients even before the business is launched. So a business is supposed to raise capital, just like a business owner is supposed to do. We're supposed to be looking for ways that we can use debt, other people's money, the bank's money, private investors' money, so that we can invest in other businesses, and those businesses will buy us other assets along the way. So ultimately, our investments will purchase other assets that will give us more freedom. It's all about working to building that asset column that we all have. We all have a financial statement, just like every business and investment. We all have a financial statement that tells us exactly how are we doing today financially. We need to take control over the cash flow in our lives. What are Bitcoin bonds? Although a Bitcoin bond is similar to a conventional bond, there is a twist. We may still lend money in exchange for fixed returns, but now a portion of our return is dependent on the future performance of Bitcoin. So the three types of income, I don't know if I did mention the third one, but it is passive income. That's what we're going to be focusing on. So we have earned income, which comes from a job. We don't want to focus on that. Majority of people tend to work for that type of income, and that's why they struggle financially, and they pay the highest in taxes because there's no room for the individual to minimize taxes legally. And then we have capital gains income, which comes from investing. And then we have passive income, or also known as positive cash flow, which comes from investing as well. We want to focus on building passive income specifically, because along the way, we will also have capital gains income, which is a lot easier to manage and to do because it requires lower level financial IQ in certain instances. A Bitcoin bond might include a tiny percentage of BTC, such as just 1% that pays out in Bitcoin when the bond matures. Rather than backing the bond entirely with fiat currency like USD, essentially it is a hybrid that combines traditional and cryptocurrency elements and can earn interest quickly. To provide some background, the Bitcoin idea was proposed on Twitter by Brian Estes, CIO of the chain Capital. This is how it operates. A bond with a 0% coupon is issued by the US Treasury, but 1% of its worth is included in Bitcoin and the remaining 99% in USD. If there's considerable demand, the bond will sell for more than its face value, with not the service that will provide the government a favorable cash flow. We, the bondholder, receive the Bitcoin kicker along with our principal upon maturity. Ideally, that is how it will operate. What distinguishes Bitcoin bonds from conventional bonds, Bitcoin bonds versus traditional bonds? Feature backed by traditional bond, fiat currency or assets. Bitcoin bond, fiat plus a small percentage of Bitcoin. Returns, traditional bond, fixed interest. Bitcoin bond, fixed plus Bitcoin base bonus. Risk level, traditional bond, low, especially government bonds, fake assets, because they're not putting any money in our pocket. If it's only taking money out of our pocket, onto that asset puts money, onto that investment puts money into our pocket in a positive way, then we can call it an asset. Otherwise, is a liability. Risk level for Bitcoin bond is higher due to BTC volatility, because crypto goes up and down more aggressively than paper assets. And traditional bonds are backed by paper assets usually. Use of fund, traditional bond, infrastructure, budget, etc. Bitcoin bond, Bitcoin projects, mining, blockchain. Transparency, traditional bond, traditional finance system. Bitcoin bond, often blockchain based, which ideally is more secure because everything gets, there's no middle person, and everything gets recorded and we can track everything digitally forever. Bitcoin bonds are very similar to traditional bonds, with the exception that they include an extra element of BTC mixed with fiat to serve as a kind of collateral intended to counteract inflation and the reduction in dollar purchasing power. This is how it will function. Like in the traditional bond market, our fixed income investment provides exposure to Bitcoin. We don't rely solely on fiat currency, which depreciates in purchasing power annually. We leverage blockchain transparency rather than bureaucracy of traditional finance. We take on more risk because Bitcoin's price may fluctuate significantly. And at the same time, when we take more risk, what happens? We gain more control. And one of the attributes of a wealthy business owner and inside investor is that we have control, and we look for leverage using debt, because debt is money, and it's free money, literally, because we're raising it. It's not our money. It's the saver's money. It's the bank's money. So we're legally using other people's money to invest in real assets. And those assets are providing a solution to the marketplace. So it's a win-win all the way around. The savers are saving money. They don't know how to invest. Debtors like we, true entrepreneurs, the new winners are the good debtors, because we understand the new system of money works with debt. So we're going to raise capital to invest into real assets that are solving problems in the world, problems that we're passionate about. If we can align them to what we are passionate about, then that is even better, because we will have more enjoyment in everything that has to do with those businesses and assets as we control them, as we maintain them, etc. Because each investment is a vehicle to take us from financially point A to financial point B. And we need to understand whether that vehicle will do that for us for a certain amount of period, or it's going to be in our lives for a long time, for the long haul. We will know exactly all of these answers as we go through the due diligence of every investment. And it's important that we understand that due diligence are the second most important words in the business language. The first ones are positive cash flow, or also known as passive income. Certainly, these things may sound well, but these bonds are not flawless. Thus, appropriate risk management should be considered. Although a Bitcoin bond has a potential for upside growth, it is a highly unpredictable asset that requires more study, self-control, and a long-term perspective, and also a good team around us. Remember, investing in business, both are team sports, and we cannot have investing without talking about business, because investing is business, is having a business plan that has a lucrative exit strategy. So the more we hone down on the basics of business, the better investors will become automatically. And we want to be above average, because the average, they don't study financial education. Average people, average investors, they study academic education. They go to professional education. Some of them. Some of the people end up just working for somebody else without a professional education. They get real life experience, they have a job, and that's what they do the rest of their life until they can. We're going to take a whole different approach here in our community, because we're building true freedom. We're building total freedom, true wealth. And that requires us to accumulate assets, control assets, build them, acquire them, maintain them on our assets column. Real assets that produce passive income in all the types of markets that exist. Whether the market is going up, sideways, down, we're always cash flowing, because we understand how to invest like the ultra wealthy. We understand business basics, and we have the right tools in place with the right team. We don't want to do things alone when it comes to business, because otherwise we will get beaten very fast, because the world is full of teams with businesses. And so we want to really do it big, as we should. We want to do something, we better do it big. We better go big. We better go all the way. We want to expand. We don't want to shrink. And when we're building our assets column, we don't want to save. We want to expand. We want to grow. And when a person is not doing so well financially, that person needs to expand, doesn't need to shrink. We need to fix our communication lines. We need to make sure they're clean, have ethics in, because when we have ethics in, then business transactions can come a lot easier, because we can spot liabilities and we can spot our ethics very easily, because we are doing the duty of putting ethics on ourselves, which can be difficult at times. It requires a lot of focus and commitment to do the right thing at all times. Are Bitcoin bonds superior to traditional bonds? It truly depends on our individual financial objectives. Staying in the conventional bond market makes more sense if we are playing it safe and simply looking for stability. However, Bitcoin digital bonds give us the chance to accumulate money when fiat currency is continuously devalued. And every currency in the history of the world has always gone back down to its intrinsic value, which is zero. That's why the Continental went to zero. Now the dollar is losing value every single day since it was separated from the gold standard. What does that mean? That inflation will continue to rise because the more we print, the more the dollar loses value, just like the Continental, the same thing. And what we have to do, instead of saving that paper that is losing money, that is losing value, since it's fake money, it's fiat money, it's just an idea, we need to grab that paper and grab digital money through loans, through debt, and invest it in passive income, actively continue to do that so that we can continue to grow our passive income and create more wealth in any type of economy and stay ahead of inflation. Inflation doesn't matter for the one that is actively investing in real assets among the 5 different asset classes that exist, because we're beating inflation. We're not fighting against the current. Why are people saving money today when money is being printed by the government? It makes no sense for a person to be actively saving money without having a plan to invest that money. When we look at majority people's financial statement, they have no assets on the assets column. And sometimes they put assets on their assets columns that are liabilities. And we have to show them that those are liabilities because it's taking money out of the person's pocket. It doesn't matter if the value of the house is going up. If it's not putting money in the person's pocket, and if the person has to go up every day to make money at a job to then come back at the end of the month and pay for that house, and that house, regardless of the value of the house, is not an asset because it's not putting money into the person's pocket. The person is paying for that house. Now, if the person rents out the house through an Airbnb and the person takes one of the small rooms to sleep, and the house now is being paid with the revenue that is being created from the renters that are coming in from the Airbnb, then now the house becomes an asset to the person because who's paying for the debt? The landlord or the clients? The clients. So it's good debt. It doesn't matter if it takes us 30 years to pay for the debt. We're paying the debt every single month to the bank, and whatever is left is our positive cash flow. So now that debt is making us money, and we can use that to minimize taxes all the way to zero on the money that we're making. And if we have a strategic plan with our team and we have a tax strategy, then we can allocate that money that is coming in every single month into the right places so that we can also minimize taxes on that passive income. Not just that we're not paying money, taxes on debt, but we're also minimizing taxes on the passive income that we're accumulating from our assets. And that's the holy grail, to be able to pay zero in taxes legally and print money for free, because we're using good debt. We're using the bank's money to invest in real assets. We know how to raise capital because we have mastered the ability to not only find real assets, valuable assets that are for sale, but we can also put together a new asset. We can acquire a team. We can launch a business from scratch and raise that capital because we understand the basics of business. So we need to be okay with managing risk. We need to be okay with being in debt. Don't be debt free if the ultimate goal is to become wealthy. We need to master how to use debt and how to be in more debt every single day so that we can allocate it into the right places and we can create passive income from thin air. Basically, it's money for nothing, and it's tax-free wealth. They combine the well-known fixed income framework with Bitcoin's long-term potential. Holding both is also an option. Maintaining conventional bonds for our stability and include Bitcoin bonds as a speculative yet a strategic component of our investing portfolio. However, be sure to get expert advice and do our homework on this. It's all about our due diligence, and it's about diversifying among the 5 different asset classes. Just like I mentioned earlier on, we want to start with building passive income, where there's a website that we launched that we're using other people's product to sell, and we're just bringing in the clients to purchase the products through our website, or we're sending the clients to the product's website, and it doesn't have to be our website. We could use third parties' websites, and we're capturing those sales and we're bringing in cash flow every single day while we're sleeping. And that cash flow is going to be used to be diversified among the other 5 asset classes. Or we may acquire a Bitcoin bond, we may acquire a traditional bond, and we begin to diversify among all the asset classes that exist so that we can stay ahead of inflation and protect ourselves from down economy. Advantages of Bitcoin bonds. Bitcoin bonds have a number of benefits, including we acquire Bitcoin with a long-term horizon without making an outright purchase. Instead of the typical bond market, we still receive a structured bond product with a maturity date. If there's a lot of demand, governments might sell these bonds for more than their face value, which is beneficial to taxpayers. Blockchain technology provides us with traceability and transparency. Disadvantages of Bitcoin bonds. With every good comes the bad. Bitcoin's extreme volatility may have a negative impact on our overall return. These bonds are still in the experimental stage and have not yet been widely used. A Bitcoin bond does not give us ownership of Bitcoin. We must have faith that businesses or authorities will take care of Bitcoin custody. Regulatory framework for hybrid instruments is still being established. What about bonds on the blockchain? Blockchain bonds are the digital equivalent of conventional bonds that are issued and administered on blockchain networks. These bonds automate their operations, including interest and principal repayments through the use of smart contracts. These bonds have quicker settlement times and don't require intermediaries, which is an advantage over traditional bonds because every transaction is recorded on an unchangeable ledger that is available to all relevant parties. Blockchain bonds also provide improved transparency. This transparency allows investors and issuers to see all that happens inside the contract, which can help foster trust. Fractional ownership and round-the-clock trading are also features of blockchain bonds, which may draw a wider variety of investors. Some people may prefer this democratization over traditional markets due to the possibility of greater market liquidity. However, remember that there are still obstacles such as the need for standardized frameworks to support widespread adoption, regulatory ambiguities, and technological dangers like smart contract vulnerabilities. Despite these obstacles, blockchain bonds provide us with a glimpse of a future capital market that is more open and inclusive. This increased their uniqueness over conventional treasury bonds. Examples of current Bitcoin bonds. El Salvador's Volcano bond is the finest illustration of a Bitcoin bond. The initiative, which was named after its aim of funding Bitcoin mining infrastructure using volcanic geothermal energy, was unveiled in 2021 as a $1 billion bond. It was intended to generate funds for both Bitcoin acquisitions and infrastructure development. The bond was set to debut in the first quarter of 2024 after receiving regulatory approval in December 2023. However, up to April 2025, there has been no official update or confirmation on its release. Since the first announcement, the Salvadoran administration has said nothing on the issue. The Volcano bond, intended to finance the creation of Bitcoin City, a planned crypto-powered tax-free metropolis at the foot of the Conchagua volcano. The city's geothermal energy from the volcano was conceived as a sustainable fuel source for its Bitcoin mining activities. Although the Volcano bond has not yet come to fruition, his idea has sparked debates on the viability of Bitcoin-backed bonds and the incorporation of Bitcoin into national financial plans. However, since there are not workable real-world instances to emulate, it is now all conjecture as to how these digital bonds will behave. But it's important to stay updated and to experiment and to get financial experience. Take risk, take the leap of faith, have a plan in place to make sure that we are getting the return that we're looking for. As we can see on our screen, we have the cash flow pattern of the wealthy class. We focus on the assets column. We see the financial statement. We have the income statement. We have the balance sheet. We have the income column, the expenses column. We have the assets column, liabilities. And the whole purpose is to focus on the assets column with real assets that we control with our companies, where we have a voice, where we know exactly what's going on, and we can make decisions that can either increase the cash flow of the asset, or we can sell the asset if we want to acquire a bigger asset that we have a spot or discover. It is important that we focus on building passive income, because that is the best type of income that exists to build true wealth and to create the dreams of our life. We're going to require excess of cash flow. So we need to understand how money works. We need to understand how to make money the right way. The way the person makes money determines who they are in the game of money. Are they employees, self-employed? Those multiply money. Those who make money work hard for us. It's a big difference on the mindsets. The middle class and the poor class have the poor mindset. The wealthy class, of course, we operate with the wealthy context. Concluding remarks, digital bonds like Bitcoin bonds might undoubtedly play a role in the financial future. They won't take the place of conventional bonds, but they do provide an opportunity to preserve value in a world flooded with debt and inflation. The concept is to provide more choices than we have had in the past. This, of course, is not without its problems. First of all, Bitcoin's concept and purpose were to oppose the existing financial system and provide an option to opt out of it, not to reinvent the traditional financial industry in the digital securities arena. The most important factor is ownership and custody. Therefore, nothing can compare to directly owning Bitcoin in a self-custody wallet. Being the one in control of the assets and liabilities of the asset is a key of the ultra wealthy. Being actively and directly involved in the decisions of our investments is far more lucrative than simply handing our money to someone else to invest it for us in whichever asset, bond, or investment vehicle available. We know that knowledge is power and money combined. So we must continue with the learning about business and investing. Diversifying in different asset classes is important, as it is how we protect ourselves from down economies and hedge for inflation. A prepared inside investor is always increasing passive income, or also known as positive cash flow, even in down economies. Learning new investment vehicles that AI and technology brings us to invest is important to build true wealth as we adapt and capitalize new opportunities on new trends. We continue the acquisition of sound assets even during bad economies or down economies. For a true business owner and inside investor, there is not such thing as bad economies. For us, market crashes are wealth mines for the ones that are prepared to capitalize on them. A sound investment is composed of a winning business plan with a lucrative exit strategy for the investor. Investing is having a plan. As long as we know everything about the investment and our return on investment is measured with facts, then we are on the right path to successfully acquire real assets. that makes us truly wealthy through passive income, and sometimes we will obtain capital gains income from those assets. We focus on building passive income, which requires higher financial IQ than capital gains income. To aim for passive income, we have to get close to the deal, as close as possible to the end side. However, we may always choose to go both routes when it comes to whether we want to be owning BTC and participating in the Bitcoin bond market. We can combine both. We can own through self-custody, directly control that Bitcoin, or we can participate in the Bitcoin bond market. A positive upside for future Bitcoin prices could be indicated by the growth potential with financial firms in the rising adoption of Bitcoin, which is widely spread among the world and businesses, because now we can pay each other with Bitcoin. Why? Because crypto is the new money in town. Is recognized as the new currency. It's just like the US dollar is a currency. Therefore, we can not only invest in Bitcoin, but we can utilize it to pay each other, to invest in other assets, to acquire other assets, and to pay businesses, because now businesses are accepting payments through Bitcoin. I believe it was 2023 or 2024 when the US Congress accepted Bitcoin as a full currency. Bitcoin bonds provides us exposure without putting all our eggs in one basket if we have faith in Bitcoin for the long haul. However, remember that this is still an evolving field. Never bet more than we can afford to lose, and do our due diligence and have a business plan with every investment we embark on. Disclaimer: this piece is for educational purposes only and does not constitute financial advice. It is essential to do our homework and only invest what we can afford to lose. For professional financial advice tailored to our needs, see a specialist and a real mentor that we trust on, that we want to learn from and be able to apply what is already working. Okay, we also need to innovate as we go along. We need to use our imagination. Remember, it's always about expanding. Bonus: what are benefits of the economic booms? The basics of investing should be learned right now. While booms are wonderful, there are unbearable followed by bust. Are we going to be ready? Economic expansions provide chances for development and learning. Using the booms to understand our investment fundamentals is the best method to reduce risk during bust. Historically, periods of innovation, supportive government actions, or rebounds from recessions have frequently led to economic booms. Consider the post-World War II boom and the roaring 20s as illustration. However, have we ever observed that people tend to become somewhat complacent during a boom when they are plump and content? Complacency is a common byproduct of life on easy street, and some individuals lose sight of how they got there in the first place. Often it was the result of factors like the diligence, learning about specific fields through research, and asking a successful mentor for advice. This brings us to the conclusion that just